welcome everybody. Let's talk real estate. Your weekly BS with Barry Saywitz about the current commercial real estate market here in Southern California. As we take a no BS look at both sides of the issues driving this market today to find the best solutions going forward. With our man right in the middle, it's Barry Saywitz. Hey, Barry.
Hey, good morning, Paul, and good morning to all of our viewers and our listeners out there. It is Tuesday, and if it's Tuesday, we are talking real estate. I am Barry Saywitz, president of the Saywitz Company and managing partner of Saywitz Properties. I want to welcome everybody back to listening and viewing in on the show. We are post July 4th, so hopefully everybody enjoyed their holiday and hopefully their long holiday weekend. It is a hot one and a cooker here in Southern California and really for the whole western part of the United States, so everybody try and stay cool. And our hearts go out to the folks affected by the hurricane in the Texas area and moving inward. So with all of that, I'm excited about today's show regardless of the heat and the weather conditions. And I've got with me one of the guys who's been in the market here in Orange County in the brokerage business for a long, long time, who does a variety of things. Brian Childs with NAI Capital, managing director. Brian, good to have you on the show.
Yeah, thank you. It's nice being here.
Yeah.
Thanks for thinking of me, thinking of us.
Always good to see you.
Yeah.
It's been a while.
Yeah.
So you have been in the commercial real estate brokerage business for a long time, probably longer than me, and you've seen a lot of changes here in Orange County, right? And so I want to go back a little bit and then we'll work our way forward. But for you, you went to school at USC, and I'm sure it was a lot cheaper then than it is today. Yeah. My son is there, and I'm certain.
I'm sorry.
Yeah, and I went to UCLA, so I got a cry sometimes at night. But you go to school, you get out of school, and then what made you decide to get into commercial real estate? Was there an epiphany or a day or something that happened?
Well, I grew up in Arcadia, ended up going to USC as a sophomore after a year in junior college, and joined a fraternity, Sigma Nu fraternity, and we just all started talking about real estate at that point because there were some parents that were involved in it. So it was one of those things, you're around these peers and you start talking about, what you're going to do for a future, and it always came up. The progression at that point in time for sales, because you had to have sales, was to work at Xerox or IBM for 2 or 3 years and then go to Grubb & Ellis or Coldwell Banker Commercial at the time. So that was the path that I took without a lot of thinking, just kind of going along with it.
Yeah, and that was the 80s too, right?
Yeah.
So real estate was like a respected profession. Not that it isn't still today, but it was a hot thing, right? I mean, stockbroker, real estate broker, doctor, lawyer. Those are all kind of in the same genre. I don't know how that goes. Today it's AI, it's I want to work from home, other kinds of things. But then it was like a thing, right?
Right.
And so then you get into the commercial brokerage business and your salary is zero. That's what mine was, right? It's not that you work for free.
Right. You work for free and you're thankful. I mean, that's
and you got a desk, right? You got a cube and guys throw stuff at you.
Yeah. So it's you have to be used to it. At that point in time, I started in '85 after working at Xerox, and I had $1,000 a month stipend, which is some money, and you just start working with. I had Bob Davis was my senior broker, and I was a runner for him, and you just start, working on their deals and helping them and delivering things, and that was a time when there was really no database.
Right.
We had the Smith Guide and a few others, but there's no CoStar. So my first job was kind of brochure filing.
Yes.
So you call the landlords, you get the brochures, you get them from the other brokers, and you file them. And that's when commercial brokerage, you had all the information. Now it's completely different. Everybody else has the information. You have to know what to do with it. But at that point, you had all the information. You held all the cards.
Right. And the pitch at the time was you couldn't go out and do it on your own. There was no Redfin. There was no Zillow. There was no, like you say, CoStar or multiple listing service. So the knowledge was really the key, the market knowledge, the experience of knowing what's going on or where a deal could get made.
Right.
Right. And then as time evolved, there's no question. I mean, when I first started, there was a stack of flyers in the corner, and I said, "Where's the file cabinet?" And they said, "Over there."
That's
right.
exactly it.
Right? You worked for a bigger company. You probably had an actual file cabinet.
We had a bigger file
Right.
cabinet. Yeah.
Right. But today, now everybody's an expert because they're like,
Right.
"Oh, I went online, I saw this, I saw that, I saw the comps." No different than buying a car,
Right.
where you can see comps for that stuff. Today, I feel like the pitch is that anybody can get access to the information. It's what you do with that information that
Right.
makes a difference. So you could go it alone. You could go call and try and make a deal. You could go buy a house on your own.
Right.
But you still don't know what you're doing. Just like
Right.
I could go to court on my own if I wanted, but I mean, I probably should take an attorney with me.
Correct.
Right? I
Correct.
could file my taxes on my own. I probably should hire an accountant.
Right.
So the 80s, the database really had to come out. I mean, even computers were just kind of coming out, right? I had the 3x5 index cards. I don't know about
Yeah,
you.
that's what I had.
Yeah,
Very
I mean,
good.
I had a file cabinet for that one. I still have it.
I had
It's-
a little box.
yeah,
Little
the
plastic
box. With the, I had the drawer that pulls out, right? So, and I just keep my notes, right? And then it was, left message, and then I'd call them next week and left message and all that, right? And then the issue then was you had to get past the gatekeeper, which was the receptionist or the secretary. A lot of people had secretaries then.
Yeah.
Now you're stuck in voicemail jail, and half the guys don't even work in the office. You gotta email them.
Right. Yeah. That was brokerage. Yeah. Door to door, talking to people, getting to know the receptionist, finally talking to the principal who says, "Oh, I'm already talking to a Coldwell Banker." So then you're supposed to say, "Well, I'm glad that happened." And
I got a guy.
yeah. So that's always the way it works. But
yeah, no, the days of getting blisters from walking around
Right.
are also over, right?
Yeah.
My feet would be killing me at the end of the day
Right.
from actually hoofing it.
right.
So, all right, now that we both confirmed that we're old and have been doing this too long, so the 80s, it's boom time, right? I
Right.
mean, you really picked the perfect time. I didn't get into it till the end of the 80s,
Right.
but really lived through this run up, and then there's all kinds of new construction. You have seen a lot of the buildings in Orange County really get built, the office
Correct.
buildings, and major corporations come to the area and really see it grow up as opposed to just a suburb of LA.
Right.
And so the market takes off and then it dies. Right?
Right.
1990 it dies. And then you can't give away office space. And then I remember doing deals with a year or two of free rent on a 5-year lease.
Right. That would have been at Griffin Tower.
Yes.
It was a 5-year deal. The first year was free rent, and then you would go to their higher than market rate.
Right.
And you would hope that tenant made it through the first year and started paying rent.
Right. And,
I mean,
they didn't care because they'd sold it. They
No,
were
they
just
didn't
trying
care.
to get full.
They didn't care.
That
at
was an
all.
80s deal.
And that was also when the market started to tank. That's when brokers would go to the open houses and
Get free food.
Yeah, get the free food, get the gifts, and the adage "stay alive till 95" came into vogue.
Right. And a lot of guys
Where
just
every year
bailed.
we'd kind of it's gonna get better.
Right. But it did weed out
Yeah.
a lot of the jokers.
Yeah, it did. It did.
And those guys went and got salary jobs.
Yeah.
And then the open houses went away because no one could
Right.
afford to do it. And there were no more Rolex giveaways and a
No.
lease on a Porsche and shrimp cocktails.
Mazda Miata.
Yeah.
I remember.
All those things. I mean, it was a great time, right? It was Gordon Gekko for sure. And so then it tanks, and then it's horrible,
Right.
right? And then it really takes a long time for the market to come back.
Correct.
Years, really,
Right.
because it's overbuilt, oversupplied, nobody's growing, economy's bad. And then finally you pull out and you get to what I'll call the 2000s with the dot-com.
Right.
And then it takes off like there's no tomorrow between the dot-coms, the mortgage industry, right? People taking
Right.
space, leasing it, not really caring what the terms were. I just need some space,
Yeah.
right? Like giving away candy.
Right. That is correct. The market, it was everybody just kept building and building, and vacancies would stay pretty consistent in the 10 to 12% range. But once 2008 hit with the mortgage meltdown, that was it.
Right.
There was 5 million square feet of office space under construction. You have a 160 million foot base, and it took a long time to kind of pull through all that new construction.
Yeah, that 08, really end of 7,
Right.
07, beginning of
Yeah,
08,
yeah.
I think. least from my own experience, all the way till 2011, right?
Yes.
It just sucked.
It did, and it was good. I did a lot of tenant wrap, so it was good for me because it was blend and extend.
Right.
So you'd have a client at a higher rate who's maybe got 3 years left, and you go, okay, why don't we do a 7-year term? You go to the landlord, and they're glad to do a 7-year term at a lower rate just to keep their building full.
Right, because they
So,
can't
yeah,
afford to
yeah.
give it back to the lender.
Right.
Right.
And that's the beauty of the brokerage business. We can be in either side of the market. A good market, bad market, anything in between. We just need to know where to be.
Right.
And we need to know where the opportunity is.
And I find that in a market that is stagnant, where there is no tomorrow is better or worse, it's
Right.
just not.
Right.
It's nothing, right?
Right.
And there, the expectation is, I don't know what the expectation is when there's no deals get made.
That's
right.
correct.
People sit on the fence. People, if you think tomorrow is going to be worse than today, then you haggle and you continue to haggle, and at
Right.
some point there's a bottom and you make the deal.
Right.
If you think tomorrow is going to be, worse for you from a
Right.
standpoint, then you hurry up and try to
Right.
make the deal. But I feel like there was a stagnation period for several years. It was very difficult.
There was, but as a broker, typically you have a book of business. So you have multiple clients with leases coming up at all different times. And, you have to look at it, 15% of every lease is going to roll every year in an office building.
So there's an event.
So there's always an event. So you just have to, keep focused, take care of your clients, continue to try to grow your business, and things work out.
And I find, we're on the tenant side, so
Yeah.
there's always an event, and somebody always has to make a deal, good or bad.
Right.
And the closer you get to the end of that lease, the more you have to do something.
Right.
And then you get to where you had COVID. If you fast forward through, right, and then nobody knows what's going on, right? This is uncharted waters.
Yeah, it is, no doubt.
Nobody can see the light at the end of the tunnel, and so everybody's making 6-month or 1-year deals, which from a broker's perspective, there's not a lot of money, because the longer
Right.
the lease, for those out there that don't know, the longer the lease, the more you make as a broker. But also from a landlord, it gives no security, and from a tenant, I have no plan of action. I'm
Right.
just kicking tires, waiting to see what comes next, because I don't know.
Right. And your client doesn't know, the tenant doesn't know either.
Right. So the landlord has to play ball. This is
yeah.
not a negotiating
Yeah, no.
strategy. This is, I can't give you an answer.
Yeah,
Right?
and that's the bottom line.
So now, okay, I don't want to dwell on COVID because there's a lot of bad things, but now people talk about and they bash the office market because they say it's still not recovered from COVID, because
Right.
everybody's working from their houses and people are redesigning their space, and there's really no new office space getting taken down. But you do both sides of it. Do you feel like the office market is in a recovery mode and it's on its way back?
The difference with COVID versus 2008, .com, 2000, 2001, going all the way back, there was no new construction. So we're slowly eating up the available space, and that's why you see the vacancy's gone up a little bit, not too much. It's kind of stabilized, and it'll stay stabilized because there's
Nobody's
new,
building it.
there's a new product coming online. Plus, you got the repurposing and of some office buildings to medical, to
Yes.
industrial, and to residential uses.
I agree. And so I think slowly
Yeah.
the space will get absorbed through a combination of just inherent absorption,
Right.
and through a combination of repurposing. And
Yeah.
there, not only is there no new construction, there's no even talk or plans of
There's
new
no
office
plans.
construction.
Everything's scrapped right now.
Because office is at the moment the least valuable
Right.
alternative use.
You have 158 million square foot base of office space in Orange County. There's only 100,000 feet under construction.
Yeah,
That pretty
it's
much
almost
that's
nothing.
yeah, it's almost nothing.
And if you look at the industrial side, almost the same for different reasons.
Right.
Right? Because the industrial market is super tight still, very limited amount of
Right.
space, but also no land to build.
Right.
So you also have very limited amounts of construction. And then the stuff on the industrial side that is new, while it's very, very expensive, seems to get gobbled up only because there's nothing else to pick from.
Yeah, COVID was the perfect storm for industrial because you had the supply side, the supply chain was disrupted. You had all the e-commerce starting to happen. People were at home, they were ordering online. The industrial, the manufacturing companies realized they can't trust having their products shipped from China and getting here in time. You remember the 100 cargo ships backed up at the harbor? So all of a sudden you had the point of delivery being the key to the sale, not the point of sale itself. So all these distribution buildings were built. The vacancy just went almost down to 1%.
Well, office rents are more expensive than Newport. Industrial rent.
Right.
On a net basis is more expensive than office space.
Right.
In Newport
Correct.
Beach.
The average rate for industrial in Orange County is $1.65 net. The average rate for office is $2.65 full service gross. A Class A office building takes about $1 of expenses, so they are literally the same.
Right.
And one requires a lot of antenna improvements, the other not so much. So it's amazing.
Good to be an industrial landlord in today's environment.
I should have been an Inland Empire industrial broker back in the 80s.
Right. Well,
who knew?
Who knew? I mean,
Wanted to be by the water.
That was when rents out there were 20 and 25 cents a foot, right?
Yeah.
Who knew?
Right.
I agree. And so I want to shift back to the office market for a second. So I think over time it will come back. It is a slower climb. There is no steep pinnacle, but at some point the vacancy will get gobbled up. Do you feel like when people's leases are rolling, there's always talk of, tenants' leases roll, they're going to take half the space and give the other half back because they just don't need it all, and then it's going to continue to flood the market, and the market will continue to stay soft. Do you see that? I don't see it as much.
I don't either. I don't see tenants giving back space. I see them waiting to the end to make a decision. Like you said, short-term decisions, 1 year, 2 year, 3 year, 4 year. And typically it's more a rearranging of their existing space. They aren't taking more space. That's the issue that we have.
Right. And it's a freshen up. So if I've been in the space for 5 or 10 years, then I want a fresher look because I do want it to look nicer for my employees. But the idea of all of these outdoor activities, while they are certainly perks for employees, the fact of the matter is that the employee doesn't really want to hang out at the office anymore. I either want to work from home, and if you're going to make me come, I'll work and then I'm going to leave. I'm not hanging out playing bocce ball with my buddies so much, even though that was like a thing and it was a selling point.
It's an amenity going in, and employers like that amenity because it can attract talent.
Correct.
But you're right, it's not really being utilized.
I mean, we built a putting green in the back of our building, and I used it, and all the staff used it, and we would have contests, and you know what? And then now nobody uses it, right? Because I'm busy working, and then if I have time to go putt, maybe I just leave and go to the golf course, and do it for real.
Exactly.
So, I find that the misnomer of how bad the office market is because people look at downtown LA, which is a bloodbath.
That's bad.
But Orange County, not so much.
We are very blessed to live in Orange County. The schools are good. The Orange County Sheriff, the police departments are strong, and they take care of the citizens. And I don't see things getting any worse from the office perspective or any other, segment of the Orange County marketplace.
Yeah, no, the biggest thing I hear from our clients that are the CEOs and the executives of companies is attracting quality talent that's going to stick around. That's one of their biggest fears that I keep hearing a recurring theme, which is Orange County is an expensive place to live. And if somebody can't live in Orange County and they have to go live in the Inland Empire or further away, eventually they look for a job closer to home because they don't want to drive. And then I have to pay more and give more benefits to attract the kind of talent that I need to. And then I, as an employer, may not even be getting the talent. Like if I coughed up the money, I'm just getting an average person or someone I have to still train, and there's a risk.
Right, that is.
And so I think that one I don't know how you curb. I think you just have to sort of work with the cards that you're dealt as an employer. And then, continue to refine your staff as you go forward. But in terms of the market as general, so like your role today for the viewers and listeners out there, not only do you have a long history of doing brokerage deals on both the landlord and the tenant side, office, industrial, whatever comes your way, but today you're managing really the local office for NAI Capital, right? So let's talk about NAI for a minute, because I'm familiar with the history and the growth of it. But for those people out there, this is a company that really went through some very expansive growth. And, what I'll call branch and franchise offices.
Right.
Started with only a couple, and then all of a sudden now it's a really big company.
Right.
So, I mean, tell us about NAI, and then I guess your role today.
Right. So I'm part of NEI Capital, and we have 11 offices, 200 brokers in Southern California. I manage the Orange County office. I've managed it since 2001. We have 35 brokers, more veteran brokers, and we do office, retail, investments, capital markets, land, pretty much everything. We're a part of NEI Global, which is, it's almost like a franchise.
Right.
So we're the Southern California group, and they are national. They have 3,500 professionals and 325 offices. We're all branded the same. And that's what's surprising. If somebody from Orange County that you're talking to, they'll fly to Florida and they'll go, hey, we saw your signs all over Florida. But it'll be NAI, whatever that name is.
It's a Remax. I don't want to equate it to Remax, but the concept is
right.
It's a franchise, but at the same time,
Right.
you're part of a much larger
Right.
organization, and you get some, I'm going to guess you get some buying power in terms of technology and resources, in addition to the breadth of being able to do deals all over the country.
Yeah, we share a lot of information. We share a lot of research. We send clients, like last week I had a client who needed something in San Francisco. I had them talk to NEI NorCal, and they have a building in Berkeley they want to sell, so now they're going to use that. My client, and that's kind of what you want.
Right.
It gives you that kind of bandwidth. But in essence, we're local brokers, if that makes sense. Really, we're local brokers with a national platform if we need it.
And the guys that are in your shop are really more seasoned veterans
Right.
in their own respect, whether it's office, industrial, investment, what have you.
Right.
And so cumulatively, you can offer a wide range of services to somebody who might need it.
Right. We do less institutional work, more local work, private client. We work with a lot of municipalities and school districts. We work with a lot of religious organizations. So in some senses, we're counter market in that when the market's not that good, when it's bad, our clients sometimes take advantage of that. So it's been, a really pretty positive few years as of late.
Yeah.
And that's kind of what you want as a broker.
Right. You got to eat, right? And you need
exactly.
a pipeline.
Yeah.
So, and in terms of your perspective, since you're dealing with all the different guys in your office, I guess talk about your sense of the transaction volume, right? I mean, we talk about the residential market and transaction volume is down because interest rates are up, but pricing never really changed on the residential side. It's still very expensive.
Right.
On the commercial side, you have office and industrial, and it's sort of a seesaw. But I'd be interested in your take on, are there deals getting done? Are there people out there making deals? And what are you seeing?
We're seeing transaction volume is low. It's for sales. It's down to 2011 activity, which is, coming out of the meltdown. So it is slow, but there's still deals being done, and it's companies and organizations taking advantage of a market that's a little fractured. So so from our perspective, our volume's up 50% this year over the year before, but it's just because of those kinds of deals.
And do you find that the cap rates for investment on the commercial side have moved, or not so much?
Cap rates are competing with fixed market rates, the 5 and 6% in the money market and everything else. I saw that a McDonald's just sold at a 3.5 cap in Fountain Valley, which was interesting that something would be that low. So
Somebody must have really liked
Yes, I don't
burgers and
really
fries.
see cap rates even being in this market, being a factor. When people buy something, buy a Class A building, it's because they're getting a great deal.
Yeah. Or I find that they're buying something for a long-term hold. If
Yes,
it's
a
a
long-term
family
hold.
business, and then the cap rate doesn't matter if
Right.
you're going to own it 30 years. Because if you try as an investor, which is how I would look at it, and try and make the property pencil,
Right.
it doesn't.
No.
Right, because you have an inverse relationship between cap rate and interest rate.
Right.
Because if your cap rate's 5.5 and
Right.
your interest rate is 6.5,
Right.
that dog to me doesn't hunt.
It doesn't. So you're right. It's value add, long-term thinkers. It's local buyers coming into this market and taking advantage of the institutional buyers who want to get out of like the 4 Huttons, 3 Huttons,
Right.
5
Some of
to
these
6
bigger sales.
Yeah. 2050 Maine, 2020 Maine, all local buyers,
Right.
meaning regional based, who understand this market and are just taking advantage of the situation.
And those buyers would come in with capital so that if they needed to do improvements
Right.
Or tenant improvements or
Hopefully.
upgrades, right?
Yeah.
That they wouldn't just come in and do nothing.
Right.
And then we'll try and,
Yeah, exactly.
run it up and fill up the property and make it better from a value add standpoint. But I find that from a seller standpoint and a buyer standpoint, there's still somewhat of a disconnect where you have the seller somewhat holding on to yesterday's pricing, hoping that
Yeah,
rates will come down so somebody will give me my price.
That is the owner user market.
Yeah.
And it is propped up. I mean, you go to Irvine Spectrum, 10,000 foot building, maybe 550, 600 a foot. You have Class A here in the airport that's 150 to 200 a foot.
Yeah, crazy.
Yeah. So that is, but I think that market's going to erode because of interest rates at some point, because we're flushing out all the cash buyers. They're getting flushed, meaning they can still compete, but there'll be a point when they go away. We're going to have some trouble. So see
And
how
I
that
find
shakes
too
out.
that the owner user with the SBA, well, the SBA is still the best deal around.
Yeah, it is.
It's still a lot more expensive than it was, right?
Right.
And so when you start penciling, gee, my rent could be X if I
Right.
rented and I
Right.
just did a lease versus my mortgage payment and my taxes and my
Right.
insurance and all this other stuff, you really got to want to own the building.
You gotta want it. You need to understand your business, and you need to understand the size of your business. And once you're comfortable with who you are and how big you want to be, you can buy a building at that point.
Yeah.
To buy a building as an investment for the what ifs probably doesn't make sense.
Yeah.
At this point.
No, I tend to agree. And then the other issue is the improvements and the barrier to entry. So
Right.
even if I buy the building, if I have to fix it up because I want it the way I want it, whatever
Right.
that means, I need more money to be able to do that. And that
Right.
also impacts my cash flow or my available cash or just my whole analysis of the thing.
Right.
Versus, we have space we're marketing for medical use.
Right.
And, tenant comes in and says, I want $100 a foot. And I said, why do you want $100 a foot? What are you going to do? And they said, well, the broker said to me, well, that's kind of the going rate. I said, well, I don't know who you're talking to, but people aren't just
Used to be.
Right. Like, how about you just tell me what you need? I'll pay
Right.
for it and we'll come up with a rate that makes sense.
Yeah, and you'll look at it as an owner, and you'll make sure that there's some reuse to it, because you don't want to put that kind
Right.
of money into a property and only have a tenant there 5 to 10 years.
Yeah.
You want to be able to reuse some of those TIs.
Yeah. And then the fact of the matter is, whatever you're going to build today is twice as expensive as it was
Yeah, it's
going back
huge.
a couple of years ago. And so, if you're doing a 3-year lease or a 5-year lease, there's not that much of a payback, and I run the risk of doing it again.
Correct.
Yeah.
That's why you see like a 3-year deal, you're going to get carpet and paint,
Right.
and a landlord may move one wall.
And let's talk about free rent, because I always find this interesting, like from the tenant's perspective, the pitch is, hey, I'm going to get you a bunch of free rent. Hire me, right? I mean, I remember in the 80s,
Right.
that was the pitch. I'll get you a year of free rent,
Right.
hire me. And then the
Yeah.
guy would just hire you, and then you didn't get him a year of free rent. That was
Right.
one building, and it was, like you say, very expensive. So, but I find that the free rent game cuts both ways, because from the tenant's perspective, they want a bunch of free rent. That's what, resonates with them.
Right.
But from a landlord's perspective, I would, on the one hand, rather give you free rent and keep my rate higher or normal, because if I have to go refinance or
Right.
if I want to go sell the property, you just hurt the value of the property by me dropping
Yeah.
the rent,
Yeah.
right? And so,
Plus the other tenants hear about it. They'll
Right.
lower it, and plus maybe your loan specifies a certain rate. Maybe you can't go below that
Yes.
coupon rate.
maybe I have investors that say, forget it, I'm not going to approve
Yeah,
the deal.
So you're absolutely right. Yeah.
Right. And so then the tenant sometimes doesn't really understand that and goes, well, I could go down the street
Yeah.
and they're offering 250 or 260 and you're at 270 or 290. And then, I don't know what to tell you, right? I can't
Right.
go there.
Right.
And so here's what I can give you. You just got to decide, what you want to do.
Right.
Right. And so it makes it difficult both from a landlord perspective and from a tenant perspective. Because I think if you're just hunting for the dirtest, cheapest rent, then that's one type of building and one type of landlord.
And usually that doesn't work out. It's probably better to find the right space and build in the right terms, the right off ramps as a business to get smaller, bigger, whatever, if your business model changes.
Right.
So I think you're trapping yourself if it's all about just the lease rate.
Right.
So
I agree. I mean,
it's
and look, my good friend Dave Colton, who
Yeah.
was the king of carpet and paint, I'll call him,
Yeah.
right? I mean, I will give you a cheaper rate because I can.
Mhm.
I'm only going to do carpet and paint because I don't want to spend any money on improvements. And the guy who's going to take that is the guy looking for the cheap deal.
Right, exactly.
And so, but like you say, the risk for the landlord is if I go and spend a bunch of money and then you leave in 3 or 5 years, I'm
Right.
stuck doing it again.
Yeah.
I can't
Yeah.
risk it.
Right. Yeah, you look at so far Hutton sold at 115 a foot.
Which is crazy.
That's what tenant improvements cost for first generation space for a typical build out.
And so why do you think it sold at that number? Because
It was high vacancy.
Yeah.
It had high vacancy, and I don't know I don't know about the lender situation, but somebody must have wanted to get out.
Yeah.
Because sometimes the institutional lenders, 20 million, 50 million is not much, and they would prefer to move on.
And I remember back, I mean, you talk about the recession where
Yeah.
the building would go back to the bank or about to go back to the bank, and then they would sell it for 50 cents on the dollar.
Right.
And then the new guy could come in and do a cheaper rent because
Right.
his basis is much lower.
Right.
So in the case of what you're talking about with this building, they could just drop the bottom out of the rent if they wanted to fill it up.
They could, yeah.
But I don't think they will.
Probably not. Probably just hang tight. It's gonna be reassessed at a lower price, so their property taxes are going down. So yeah, they'll probably just hang tight and try to limit their capital that
Yeah.
they put into the building.
No, I find, look, if you're the tenant and you find space, the less amount of money that you need to spend on the space, it's a win-win for you and
Right.
the landlord. And so if you come in and go, hey, I want to gut this thing and start over, it probably doesn't get done.
No. And some tenants don't like it when you tell them that. I mean, as you know, that's just, it kind of is what it is. You try to say, yeah, you can do all these things, but it's going to cost money. Make sure it works for you because it's going to hurt you in another part of the transaction.
Right. I love it when the tenant goes, hey, I want a glass conference room. I'm all great. That's 25
Yeah,
grand.
great.
Do you want to? Oh, well, the landlord will just do it. Oh, yeah? You think?
Yeah, I know.
So it's interesting. So where do you think the market is going? That's a broad question in
Okay.
general, but I guess I want to get your input. So for the next 12 months, we have an election coming up,
Mm-hmm.
right? The stock market seems to be continuing on its upward bound.
Right.
No sign of interest rates, in my opinion, really dropping between now and the end of the year of any
Yeah,
significance.
maybe a quarter point, yes.
So do you see the transaction volume the same or get better or worse?
I see it the same, meaning as we talked about, 15 to 20% of leases come up. Some people have to buy, some people have to sell. I don't see it going up or down
Yeah.
at this point.
I tend to agree. And what about cap rates? Same?
Cap
higher or
rates is
less?
the same. I think we're just in this spot, and it's going to take us a year or two to get out of it, and we're in the middle of it. So
And-
we're kind of just sloshing through, and deals happen, but you just have to be patient, and you have to kind of have your finger on the pulse of the market.
And for sellers that are looking to get rid of commercial property, whether it's office, industrial, retail, what is the advice? Is it still needs to be priced correctly or it's not going to move? Or
It
is
won't move unless it's priced correctly, and you probably, if you're an owner user, maybe you want to do it now because there is the potential of it going down in the next year or two. So you might want to consider doing something sooner than later
as a seller?
as a seller.
I agree.
Owner user. As far as Class A, that's going to do what it's going to do. I think we're already seeing the impacts of the lower pricing, and a lot of that is lender based, not really owner based.
Yeah.
So we'll just kind of just walk through it.
And from a tenant's perspective, I've got a year or two left on a lease. Do I go back now and do the blend and extend because I feel like I'm at the sort of troughing of the market, or do I wait and see if it gets better? Or
I think
worse?
you create the most competitive situation you can for your existing landlord and anybody else, any other building that you may have interest in. That's what I would recommend, and probably stick it out, not to within at least a year of your lease expiration.
Yeah, because it used to be when the market
Yeah.
was going up, nobody would talk to you because
Yeah.
if you're the landlord, you felt like the market was going to be more tomorrow. Why would I make a deal today?
In 2022, on industrial product, you couldn't get an industrial owner to really give you a lease rate. They would give you a lease rate, but they say this is just for today because we don't know where it's going to be next month, but we know it's going to be higher.
I think the lease rate then was what we call withheld,
Yeah,
right?
yeah, yeah, it's a lot of withheld.
Right, a lot of withheld. You run that report on, and you're like, why does everybody have the
Yeah,
same
yeah.
rate? It's all withheld because I'm going to make it up when you
Yeah,
show up.
exactly. Yeah, we're seeing less of that in office. I've noticed in the Class A,
Yeah.
where they're actually putting the rates and the coupon asking rate.
Right, and then the issue is, again, I think it's just back to the improvements. It's back to
Right.
the timing, and it's not just about what that rate is.
Right.
And so, I find, good market, bad market. If you're a tenant, you have to design the real estate around your business, not
Right.
vice versa.
Right.
So figure out if you're able to make a long-term commitment first, and then if you are, then you can design the deal
Right,
around it.
right. Where are your tenants, or where are your employees coming from? How often are they going to be in the office? What do they need from an amenity perspective?
Yeah.
It's just all that stuff. Yeah.
And where do you see Orange County as a whole? Are we going to continue to see more redevelopment since there really isn't a lot of land out there and repurposing?
I think office, you aren't going to see office expansion for a long time. We have a lot of product to go through. Retail is, it's got a 4.3 vacancy.
It's tight.
Yeah, the base is 140 million square feet. You don't see any new construction. I think it's 200,000 feet of new construction going on. But you see renovations of older projects.
Yeah.
Like there's a project down in Laguna Niguel that had, remember Tall Mouse?
Yeah.
Tall Mouse was the anchor tenant. They put in Whole Foods and they redid the whole center, and it's 100% occupied. I mean, that's what we're seeing.
Yeah.
So there'll be a lot of renovations of older projects, not a lot of new construction, unless it's an area where they're building new homes.
And what do you think? I mean, what keeps you up at night? What do you think is the biggest factor that will potentially hurt the real estate market here?
So the thing that I see, it's inflation related, but the inflation started in 2022. So food's up 20, housing's up 20%, insurance is up like 30%. Homeowners,
It's up 200% or 300% if you talk to me about insurance. But
well, yeah, me too, because we have to do the FAIR plan, which isn't fair. But so I see inflation it's not continuing to go up, but just the prices that are set from inflation. If you go to the grocery store now, I don't know if you notice, everybody's looking at an item. Like, do I want to pay $6 for chips?
Right.
And they're really analyzing everything. And I think it's just starting to set in. Main Street's dealing with it. Wall Street hasn't dealt with it. So that's what I don't know. I don't know what's going to happen because their spending patterns are changing. And I don't know what that means. I feel for our kids and the next generation coming up for sure. But I think there's going to be an impact there.
Yeah.
And I just don't know how it's going to see itself out or what will happen.
I agree.
Yeah.
So I told you it would go quick. It always does. Paul's waving at me, saying we only got a minute left. So if people want to find out more about you or about NAI, what's the website? Where would they go?
It's neicapital.com. Just track me down, give me a call, Brian Childs. And I'd love to talk to anybody. Brokerage is a great business. If somebody, wants to find out about it, give me a call. We'll talk. It's definitely a good career. So, yeah.
So buyer, seller, investor, wannabe real estate
Right.
broker, call Brian.
Yeah, you got it.
He'll take your call
and I'll
either way.
point him in the right direction and help him out.
And if there's no deal for him, he'll find you a guy.
Yeah,
right?
you got it.
Well, good. Brian, I appreciate you
Yeah,
coming
thank you,
on the
Barry.
show.
It's very nice.
Always good to see you.
It's nice
and
seeing you.
Thanks for sharing your thoughts and much
Okay.
continued success to you
All right.
and the firm and the family.
Okay, thank you.
Yeah.
Thank you.
So I'm Barry Saywitz, president of the Saywitz Company. I want to thank everybody for tuning in again on Let's Talk Real Estate. I want to thank everybody here at OC Talk Radio, as always, for helping to put the show together. If it's Tuesday, we're talking real estate. We'll see you back here next week. Thanks again.
Well, there you have it. You've been listening to Let's Talk Real Estate, your weekly BS with Barry Saywitz about the current state of the real commercial real estate market right here in Southern California. On Orange County's only community radio station, OC Talk Radio, streaming live from our studio here at the University of California Irvine's Beale Applied Innovation Center.